Morgan Stanley has upgraded Tata Consumer to an overweight rating with a target price of 886 rupees a piece. Mind you, the double upgrade by Morgan Stanley on Tata Consumer is with regard to the business fundamentals improving and changing for the company. Morgan Stanley believes that the growth levers for the company are aligned and that the company is building up certain growth pillars from a perspective when we look at Starbucks and when we look at Nourishco. With regard to its FY23 as well as FY24 bottom line PAT expectations, Morgan Stanley believes that FY23 they've actually pushed up estimates by 5% for FY23 and 11% for FY24, and that's what's probably pushing the upgrade in favor of Tata Consumer. While the Tata Consumer stock has been one of the laggards, so when we look at it from say September of 21, where it made a high of 889 rupees a share, Tata Consumer has actually bottomed out at 700 over the last month or so, and it's currently trading at around 720 rupees a share. So the stock has corrected. It's one of the laggards in the consumer space, and that offers a good entry point for investors is what Morgan Stanley believes, and that's why it's given an upside of 22.5% to the stock. In fact, coincidence or otherwise, the Morgan Stanley has given a target price of 886, which is the 52 and the all-time high, 52-week high and the all-time high for Tata Consumer as well. So good commentary coming in from Morgan Stanley on Tata Consumer. In contrast, when we look at Nestle, Morgan Stanley has downgraded Nestle to an underweight. Nestle, of course, has the most premium portfolio amongst its food peers in that FMCG space in India. It's, of course, one of the most reputed companies, especially when it comes to the milk product and nutrition business. So the company, of course, what Morgan Stanley believes is the company's new journey with regard to rural distribution and expansion is what is going to drive down margins, and that coupled with the weak performances from both the milk products as well as the nutrition business is what is influencing their guidance downwards towards Nestle. Nestle currently trading just above that 19,000 a share mark, expensive stock, and the downside is almost 17%, and the target price kept by Morgan Stanley is roughly 15,712 rupees a share as we look at it at the moment.